Hello everyone, I'm Taha, financial market analyst with zForex, and this is our weekly analysis. Welcome abroad.
Hello everyone, this is Muhammad Taha Bukhari, and this is our weekly video. We will start with our important events for the week, starting with the important events where we will see, especially for the dollar, it will be a complex week where we start with the retail sales data, which will have an impact about sentiment, especially about the next September Federal Reserve meeting and the data concerning inflation and the pressure of prices, where last week we saw a CPI and a core CPI, especially CPI that is coming back but moderate. So it was better than expected. Core CPI, especially annually, that is slowing a little bit. So right now, think about inflation in USA. Is it will continue slowing down, or it will start to be sticky? Especially right now, there is some pressures coming from two things. First of all, energy price energy that are going up, and oil prices that are going up too. Also, food prices that the many indicators or many food prices are going up. This may make pressure, especially on the CPI, especially the headline. We will see the impacts on the next months. We had a PPI that is it's higher than expected. We'll see this if it will start from a PPI and go into CPI. The retail sales will give us an idea. So this retail sales and quality sales will make an impact on the sentiment. Also, we have the FOMC. We have the FOMC meeting. This FOMC meeting will be an important for the minutes. Will be important for the Federal Reserve and its insights about the inflation figures that we had, what they think, how they are seeing things concerning inflation and the pressure of inflation on the economy, and especially their interest rates that is stopping right now at 5.25%, and this impact on the economy and on the inflation and slowing down the inflation. Also, at the end of the week, we will have data concerning New York State manufacturing data that will give us an idea about the manufacturing activity in USA that is slowing down month after month, not just in USA but generally on the economies, developed economies, where the tightness cycles right now are having impact not just on inflation but economic activity also. So concerning the dollar and the performance on the dollar continue leading the majors. We had last week a breakout of an important level around 102.8, and this important level will open the door toward the 103.4. The 103.4 is a historical level that we will watch carefully, especially coming with the 200 moving averages, a confluence point. So leading toward this level dollar at this level may face some resistance historically, like I said. This dollar movement coming also especially from, we can see the yield right now, especially on the US. In the US bonds, it's high. In front of us we have the US 10-year, where we can see we went back close to 4.2%. Today we have a backup, or we have a coming back on the yields. But the yields, if it says something to us, is that the marks right now is pricing that the Federal Reserve will continue hiking, or it may continue sticking and putting interest rate at those levels for a longer time, as the inflation pressure, no one is believing that those inflationary pressures, and even if it's slowing down, it's momentary and it will go just like that. It may stick and it may face more pressure, like I said, because there is many factors, especially the energy, oil, and the food prices, that they may make new pressures on inflation. So the yields are high and they may continue high. This is impacting dollar and demand on dollar, especially the bond US. Also concerning the euro dollar right now we are able to see that we found strong support around the 1.092. The 1.092 played a support. We had this formation, this pattern that seems that prices are not able to get out between the 1.092 and the resistance level around 1.1040. So this resistance level with this support level, we are fighting to find the direction. This range of price, if it means something, it means that we are waiting for some data that will give us a clear direction, especially for this week. This week, concerning the euro, we will have the economic sentiment indicator. It was an idea about sentiment toward the economy. Also, we have the GDP, we have the CPI. So it's an important week for the euro and data, economic data for EU region. Right now, talking, for example, about CPI in Europe, it's sticky. The core is so much sticky. Inflation pressures are still high in EU. The ECB, the last time, Lagarde mentioned how interest rates right now at the actual level is impacting economy, and the pressure. Even the last week, the economic bulletin, where they mentioned it clear that the actual tightening policy, it's continuing impacting demand, and this, of course, that's how ECB want to attack inflation through, we will not say killing demand, but reducing demand. But this may take economy to a high probability of recession back to level. Do the ECB will continue? We'll see in the CPI. We see Germany, where CPI, core CPI, is still high, 6 point something, 6.4, 6.5%. So it's sticky in the EU, and this may make things more harder for the ECB. And like I said, for the euro, dollar, if we have a breakout of the actual support, we may go to the historical level of 1.085. 10.85 is a historical level, important level as a support. For also the pound dollar, this week is important for the pound also. We have many economic data. The pound dollar itself went to this support level around an area between 1.26 to 1.20, it's 26 level area, where it's finding that we are seeing somehow a double top. As we'll see if it's a reversal pattern or not. This week we will have many data, especially we have the important thing that is concerning wages in the UK that are going high and high, making pressure on inflation. Also an unemployment level that is going low. So this is what not the Bank of England wanted. Last week we have better than expected GDP levels, where make more pressure on the Bank of England to prepare for another hike on the Bank of England that is right now at about 5.25%. Like the US, it may more than that. There is a big probability of recession attacking, first of all, the housing market, with mortgage rates are going to some highest levels, from some high levels that may impact truly the housing prices and the housing the demand on the housing. We saw that also in the levels of mortgage demand, and also on the prices, average prices in the UK, which is slowing down for homes. Yes, for recession in the UK, of course, there is a huge probability that it may happen if the BOE continue the hike. BOE may not find itself with any solutions than this. There was a lot of talking about a possible fiscal policies that may help in fighting these pressures. We will see the data, what they will tell us. The unemployment is on Wednesday. Inflation right now, it's continuing high. Like we said, the core inflation is sticky, it's high. We said that we may see a new wage of hike, inflation wage, especially, like I said, oil, energy, food, and especially in the UK, we have a high food inflation, and this making a lot of pressure on households. So we'll see what the UK, what the BOE, and what the UK economy will tell us, the British economy will tell us. For another important data, we have the Canadian. We have the dollar Canadian. We have the Canadian dollar, where right now the dollar is leading leading the movement, and we will have focus on the inflation figures. We will have also on the wholesales, housing start. So this will have an idea about the Canadian. We have an oil prices that going high. It may help the Canadian dollar, but right now it's not that much. An important other events is the New Zealand. The New Zealand where we saw the last week a huge drop in manufacturing activity. And this week we'll have a meeting of a meeting of the Reserve Bank of New Zealand. We are waiting for no change on interest rates. We have no change on interest rates. This especially right now the impact on the economy is clear. This tightening cycle has an impact on the economy and it's clear. Also we will have the comment or the statement from the Bank of New Zealand, Reserve Bank of New Zealand, to give us an idea about their forecast about the economy, about inflation, about other important key data, economic data. At the end, I need just to see the New Zealand dollar pair, how it's performing. It's performing poorly for sure. With the Australian dollar, we have one of the worst performance from on the last month and this month. We are going back toward the level of 0.5, like close to 0.5 59.70. This level that is representing a support for the pair, 70 or 60 support for the pair. If dollar continue performing high, we will see more sell-off. We will see more pressure on the pair. Also, it's the case for the Australian dollar. It's similar. We are having a lot of pressure, especially those type of two currencies, risky ones. So with the more and more pressure on risky assets and risky currencies, we are seeing this. At the end, we will talk about the dollar Japan and the Japanese economy. We came back to the 145, the risky level, the level where from the last time we saw a coming back. Right now, we went back to this level. Will we have a breakout and continuing up? That's another story. But the Bank of Japan, the officials, they are all talking about, and they talked the last time when we were close in June, when we were close to the 145, they talked about an intervention. And we know that the Bank of Japan right now, it does not want it to change its a policy, it's monetary policy, and a shift on this monetary policy will depend to many data, especially we have the GDP this week, but also the last time the president of the Bank of Japan mentioned that they still keeping right now the easing monetary policy. They don't want to change the interest rate. They don't want to change the stance. The only thing that we had is getting a little bit out of the actual yields control curve, but this didn't have a lot of impact. But we have right now, we see clearly that we went back to 145. A breakout of this level of the 145 seems possible, take us directly toward the support resistance. Here we have all support about 146.4, 146.5 to 4. It's a historical level. It's also the upper parallel of this actual channel. So the Japanese yen is having a lot of pressure, especially with the dollar. This week we will take a look on the GDP, on the performance, and see how the Bank of Japan can react. So this is what we have in this week. I wish it was helpful, it was clear, insightful for you. I hope a great week and a great trading experience. Thank you.